and welcome. Today we are looking at the launch of Mirae Asset Gold Silver Passive Fund of Funds, a product that invests in both gold and silver through ETFs. In this conversation, we'll explore what it is, how the allocation works, and the thinking behind putting these two metals together. Joining me are Siddharth Srivastava. He's head of ETF Products and Fund Manager at Mirae Asset Investment Managers, and our in-house expert, Dhirendra Kumar. Welcome, gentlemen.
Thank you.
Thank you.
Siddharth, let's start with the basics. What exactly is Mirae Asset Gold Silver Passive Fund of Fund, and how will it work for investors?
So let me first set the context. Gold has been a very popular investment made since quite a while, and silver is also getting popular. As of June end, the gold ETFs is in excess of 64,000 crores, and that of silver ETFs is in excess of 20,000 crores. Gold has got inflow of almost 22,000 crores in last 1 year, and silver has got almost 50,000 crores. So the recent performance of both the commodities have obviously aided this growth. So there is interest in both the precious metals, and this fund of fund will take exposure in both gold and silver by investing in domestic gold ETF and domestic silver ETF to take desired exposure or allocation based on our investment framework. Since change in allocation is being handled by the fund itself, there will be no tax impact due to allocation change. Whereas if the same is done by investors themselves, it will possibly invoke the tax incidence.
So, Siddharth, you did say that a lot of investors are pouring money into gold and silver, but at this particular time, why put gold and silver together in one fund? And does this pairing help reduce risk, or is it more about capturing opportunity?
That's a great question. So my answer will be a bit longer. So while both gold and silver are precious metal, they are driven by different factors and have had very different behavior historically. Gold has been a wealth creator and acted as a strategic hedge against market uncertainties. As a safe haven asset, it works well during elevated geopolitical and market risk. It acts as a hedge against inflation, against weaker dollar, and recent central bank buying has been a big positive for gold. Silver, on the other hand, has also created wealth but is more cyclical. To put it simply, the return potential of silver may be higher at times, but so is the relative volatility and drawdown. Silver has higher industrial application. It's affected by market cyclicality and perceived supply and demand for its usage. Let me also talk about returns because that will further put the context of why we are doing it. In last 70 years, silver has outperformed gold 8 times with reasonably higher upsides. For example, silver has given more than 40% returns in 3 calendar years since 2008, with maximum return of around 70% in 2010, whereas gold has crossed this threshold only once. But silver has witnessed higher drawdown, like I said earlier. For example, in 2013 and 2014, silver corrected by around 23.5% and 15.9% respectively, whereas gold corrected by 4.5% and 7.9% respectively, had a much lower correction. So hence, in the longer horizon, gold has outperformed silver with relatively lower volatility. As of July end, silver has given similar returns to gold in last 3 years of around 24% plus, but gold has outperformed silver in past 5 year, 10 year, and other longs by giving a return of 12.8% in 5 and 14.8% in 10 years, whereas silver has given 11.12.6% respectively. Importantly, since 2008, the average rolling return of gold for 3 year investment horizon is 12.5, while that of silver is less than 10%. but maximum return observed for 3-year investment horizon is higher for silver compared to gold. Also, lastly, for 3-year investment horizon, silver negative returns 12% of instances, whereas, gold has given negative returns 12% of instances, whereas silver has given negative return on a same 3-year investment horizon in 24% of instances. So while there is euphoria over a bit more recently, so I think investors should not view gold and silver with the same lens because they have behaved so differently in history. So I think this gives us the opportunity to create a fund which obviously addresses this concern. So this fund will allocate between gold and silver, taking opportunity by tilting towards one commodity depending on the near term outlook and expectations. So it just takes away the worry of where to allocate, how much to allocate, and how to shift between gold and silver. So I think this fund in current scenario makes a lot of sense. And as far as opportunity is concerned, I think the fund will take position in both gold and silver, so participate in opportunity of both, and the risk will be somewhere in between gold and silver.
Right. So, Dhirendra, as Siddharth also mentioned, gold is often seen as a safe haven hedge, while silver is more tied to industrial cycles. So, how should investors think about the risk reward of holding both in one product?
One is to really understand gold and silver. Both are precious metal. They have a long monetary history, but they are like cousins, with a very different temperament. Gold tends to shine in times of uncertainty, and the recent, I would say, the fancy for gold is substantially driven. Greater uncertainty and gold shines. And what we are witnessing right now is a very historic situation that central banks all over the world are tilting towards gold, and that has created a whole new demand for gold. And that is why we see this. And after that, the financialization of gold led to investor chasing performance. It's possible to buy 100 rupees worth of gold ETF, 500 rupees worth of gold ETF. It has been virtually democratized. Silver has the same monetary history, but it also behaves like an industrial metal, influenced by demand and the new, energy transition technologies. It has created a whole new demand for silver and solar electronics. So in that sense, it also becomes cyclical because of the cyclicality of demand and supply. Uh, so both whole are promising. I think gold brings stability relatively more. Silver brings spark if one is able to tactically time it. And together, I think they are a good combination of, safety and opportunity.
All right. So, Siddharth, can you elaborate on how the allocation will be decided between gold and silver in this fund? And is it a fixed split or will it shift based on market signals?
Actually, in the last answer, we talked about that how cyclical both the metals are, right? Silver more so. So I think because of that, the allocation will be in nature. In our investment framework, consider gold and silver equally to start with. For example, there will be no biasness, and hence the baseline allocation and the benchmark is gold and silver with 50% allocation each. So that will be the starting point. So, for example, if everything was correct, both gold and silver were valued in a correct manner with similar expectations, the fund will have a 50-50 allocation in both. But more often than not, that's not the case, right? So then we will tilt the allocation towards gold or silver based on factors like near and short term momentum, gold silver ratio, technical and fundamental factors like demand and supply, uh, currency, market and geopolitical risk, rate cycles, etc. So, whichever metal is having a relatively better expectation, the allocation will shift towards that side. It can be towards gold, it can be towards silver, or even can have a balanced allocation, like I mentioned. So, for example, allocation in one commodity can even shift 70-80%, depending upon the market scenario. As of now, for example, the framework is tilting a bit towards silver, by not much, because silver also had a rally recently. So it's not the case which was 1-2 month back in terms of silver being priced at a very sweet spot. So it is tilted towards silver. So it will be dynamic allocation in this fund of fund.
All right. And for someone building their portfolio, where does this fund fit in? Is it a core holding, satellite allocation, or a tactical play?
Yeah. So I think first of all, precious metal exposure is must in every investor's portfolio. It reduces the risk of your overall portfolio because of lower correlation with equity, and it adds a new wealth generation avenue. So I think uh, precious metal should be there in every investor's portfolio, and then this is suited for investor who wants to take exposure in both gold and silver, so wants to participate in return potential of both, and is okay with bit of higher volatility relative to standalone gold uh, investment, right? And I think typically in a portfolio, roughly around 10% of allocation may be there in precious metals, and this fund of fund will probably fit in that space.
All right. So one last question to you, Dhirendra. Is this a product for conservative investors looking for stability? Siddharth just mentioned that someone looking for okay with higher volatility, this makes more sense for them. But does it make sense for conservative investors or aggressive investors seeking diversification?
In fact, it can work for both, but in different roles. If you
Mhm.
look at conservative investors, gold silver mix is a way to add a non-correlated asset in there, to cushion against equity and bond portfolios in turbulent market. In fact, in turbulent market, equity and bond both struggle sometimes. I saw the first emergence of the gold fund immediately after the global financial crisis, when we were witnessing the collapse of the bond market or the freezing of the bond market, and the big decline in the equity market. And globally, it wasn't an isolated Indian incident or a US incident. And for aggressive investor, I think it is a diversification play. So I think the way to really look at, it's a asset class that dances to, different tune it's completely uncorrelated. Even commodities like oil, they don't relate to. So you should not you're not buying it to replace your core equity or fixed income allocation. You should just add a small part to it depending on how much exposure you want. I think it's a hedge for the cautious and good diversifier for the adventurous.
All right. Well, that brings us to the end of our discussion. Thank you, gentlemen, for joining in.
Thank you.
Kiruchira.
So we've covered what Mirae Asset Gold Silver Passive FoF is all about, how it works, and where it might fit for different kinds of investors. If you found this conversation useful, do like the video, share it with others who might benefit, and subscribe to our channel for more such interviews and insights. Goodbye.